DBS Bank is ready to roll out its wholly owned subsidiary in India by October. Piyush Gupta, CEO DBS Group, tells Neha Bothra the bank is looking to grow its retail and SME business in India. Gupta says there are early signs of pickup in private investments. Listen into the slice of that conversation.
Well, when we got the in-principle approval, which was in September last year, we had anticipated about 12 months to be able to actually start physical operations. That 12 months involved incorporating a company, getting a license for the new company, and then getting approval to amalgamate the old business with the new business, and other things like establishing a new board and so on. We are on track. We are fairly confident that we should get our final sets of approvals in the next few weeks. And if that happens, then we should be in a position to actually start physical rollout by October.
At present, you have about 12 branches in 12 cities. Could you tell us about the game plan there? How many branches are you targeting and any more cities that you want to reach out to?
Our plan is to try and get to about 30 cities in the next 2 or 3 quarters, certainly well within a year. And to try and get at least 80 to 100 points of presence across the country. That includes not just branches, but also outlets and micro presences across the country. And we're fairly hopeful that we should be able to do that in our first year.
So at present, if I'm right, about 70% of your loan book comprises exposure to the corporate segment. Is this a trend that is going to continue for the new entity as well? If you could take me through a rough idea of what the portfolio is going to look like for the new entity. Will the thrust continue to be on large corporates, SMEs as well, or will retail increasingly be garnering your attention?
Actually, the intent of subsidiarizing is to start growing our SME and our retail portfolios relative to the large corporate book. A large corporate business you can do with a few branches. You won't need a national presence to do that. And therefore, what you will see as we go forward is we start doing a lot more SME business, and we will start doing a lot more retail business, including retail lending.
In the retail space, you have competitors like HDFC Bank, Kotak Mahindra Bank, ICICI Bank. Is the game going to be tough here? How will you differentiate your services and your products, considering that these names are already entrenched in the retail space? They have a connect with consumers. So what marketing spends are you looking at, and how will you make that connect with customers, given the background and the competition that you have in the space?
Well, India is a fast-growing market. Indian nominal GDP grows at some 12%. Banking sector growth is 20-25%. So the market is growing fast enough for a lot of players. On top of that, you have a structural change in the market. The national banks have been losing share, and therefore the private banks are actually seeing a market opportunity well more than the 20-25%. I sometimes respond to this question and say you could have said the same thing to HDFC Bank when they launched, how will you ever grow? Or to Kotak Bank when it launched 15 years ago, or even to some even more recent banks. The question is always the same. There's so many players, how will you grow? In a fast-growing market, it is always growth if you create a good customer journey, if you can create a good customer value proposition, and be able to focus on differentiated niches. We are extremely good at being able to do this, and we've been able to do that in several countries in Asia. So with our expanded footprint and reach, we're fairly confident that we can do this in India as well.